and what a surprise pickup in the market eventually yesterday. What looked like it's going to be one of those days where we're going to fall prey to the weak global cues. And then we saw some resurrection coming in thanks to metals, thanks to SBI, thanks to energy names, and of course some of the selective private banks as well participated. So net, we clearly ignored the US inflation print, exactly the point that we were making same time yesterday.
So Aisha, look, what matters, at least in the near term, is the domestic activity. And we've historically seen that the dynamics of the US inflation are very different than what the Indian macro setup is. So I'm glad markets did the obvious, which is that they started gap down because of a pushback from global cues. Then came that bout of short covering, which was also followed by domestic buying. Yesterday's buy figures were yesterday's institutional numbers were decent. Nifty recovered 300 points from the day's low. Bank Nifty recovered about 1000 points. And there was definitely a bout of short covering, which was there both in Nifty and the Bank Nifty. So what are markets telling you? That global cues are important, but they are not crucial. What are markets telling you? That yes, if there is a bit of a macro shakeout in the global market, markets would consider them, but that does not become the real benchmark. So this is A, maturity of the market. This is B, also a telltale sign that how there is a big divergence which is happening. We will certainly react to global cues, but the global cues then they really have to be very very shaky, or they have to be very scary. Small anecdotal data which every time Indian markets would take cue from, I think that is getting diluted and that is getting ignored. I'm not saying that Indian markets will march on their own tune. No, that's not going to happen. But small pushbacks in the market, I guess they are all turning out to be buying chances rather than a time when you need to run and scare. And I think yesterday's market is also impressive simply because it's come at a time when you had a little bit of shakeout, a little bit of skim from the top in PSU stock. So I think for me, yesterday's market is nothing else but a mark of stability and a pure endorsement of the fact that what matters, I think, is the local environment, not so much so the global connect.
And I guess the institutional activity as well was proof to that. FIIs continued to be sellers. It was DIIs which were the buyers.
Yeah, and that number I think is just getting more and more magnified now.
Yeah.
I mean, I thought 2023 it was all about compulsions in terms of weightage changes and what was happening in global emerging market allocation. But the fact that the month of Feb we've not seen any large flows, the fact that in the month of Feb Nifty is not broken down. We are actually sitting closer to 21,000 rather than 20,000, and despite very little support coming from domestic global investors, that is a clear indication that how strong the local retail stroke the DI flow is. So for me, I'm not saying anything new and obvious, but for me, I'm simply putting the facts here that small ripples in the global market is unlikely to have an impact when it comes to Indian market setup.
Okay, speaking of the little bits of nuances that the market as well is observing, and it's interesting to really look at what's happening within the entire banking sphere. Of course, traditionally, one used to always lean on a heavyweight like an HDFC Bank, which has a weightage of 26.4%, as you can see, among the banks. But given the spate of underperformance, the question is, with SBI's fundamentals looking fairly strong, can an SBI do, Nikunj, what an HDFC Bank did?
See, the weightage is different.
Yeah.
So obviously, that's 26%, this is 10%. Yeah. So in terms of the impact what SBI would have versus what HDFC Bank would have, the impact I think would be much less. But I guess SBI has done something special in the last couple of days, and that is what I would like to point out. Post numbers, there were a lot of naysayers who said, okay, there is a general challenge in the environment, liquidity is crunched and NIMs are likely to be under pressure. SBI has really surprised everyone and delighted everyone. I think two factors are at play here. One, post HDFC Bank numbers, HDFC Bank, which in a sense had become the most concentrated contra bet, that in a sense has gone on the back burner because markets did not like what HDFC Bank had indicated. But markets are aware of the fact that the Indian banking sector, I think, is in a good shape. And within that, I think the switch is on. So if you compare HDFC Bank versus SBI, I'm purely looking at price action here. The price action, I think, is just giving an indication that how money is moving out of HDFC Bank and how money is moving into State Bank of India. B, I guess State Bank of India is still very cheap. Valuations are not very expensive. They are at that turn where size is becoming their advantage. The liability franchise is still intact, And while SBI may not be doing the kind of heavy lifting what HDFC Bank can do purely because of the weightage, but SBI coming back, that in a sense becomes the real pivot for a lot of PSU banks which otherwise have been in a good group. I'm going to say the same line which I said 2 years ago. Who says elephants cannot dance? Well, this one is an elephant, and this one has decided to do a tango.